Let's finish out the week with some major unemployment news. Starting off with the US dollar, we had some surprising results. Forecasted to remain unchanged, the US unemployment rate actually rose up to 3.6%, a big jump and a surprising one based off the data reports from earlier in the week. Will this sudden jump cause Powell and the Fed to slow their previously mentioned plans for faster rate hikes? Canada also had their unemployment rate report. Canada, forecasted to raise slightly up to 5.1%, actually came out unchanged, remaining at 5%. Monthly GDP numbers in the UK came out as well, coming out better than expected at 0.3%. That's it for this week, but be sure to follow up and watch our live streams next week as we cover the latest news and market analysis each morning. All right, everybody. So two surprising unemployment rate reports, the US dollar and Canada, both missing their forecasted rates, although in Canada's case, it was probably a good thing. Canada expected to raise up to 5.1, but instead we can see here remaining at 5%. The US, on the other hand, forecasted to remain at 3.4 and raised up to 3.6. So 3.6% unemployment is the new rate in the US, still on the lower side, relatively speaking. We can see all of our unemployment rates for all of the different countries' currencies that we track here. So US 3.6%, still on the lower end. Canada remaining at 5%, but still on the higher end of the spectrum. Let's check out the market heat map as well. We can see how our assets have been trending so far today. So up here towards the top, GBP USD, our biggest mover to the upside out of all of our assets so far today, up 1.25% on the day, followed by gold, GBP CAD, NZD USD, GBP AUD, and Euro USD. So off of that unemployment rate report, I'm getting the sense that US dollar pairs are selling off. I know that the dollar dropped fairly hard on that news event. GBP USD, our biggest mover to the upside, like I mentioned. If we check down here towards the bottom, we're going to see a lot of US dollar crosses as well. USD ZAR, USD CHF, CAD CHF, Aussie CHF, USD JPY, and CAD JPY as well. USD ZAR selling off the most, down 1.7% on the day so far. Let's go into the watch list and check out our buy and sell biases. Here they all are, but I'm going to remove any indices or commodities that we might have, just indices at the moment. So there we go. These are all of our currency pairs that currently have a buy or a sell bias. 3 strong buys at the moment, 4 strong sells. USD CAD still listed as a strong buy, even off of that disappointing unemployment rate decision. Let's see, Euro USD, GBP USD, Aussie NZD, and Aussie USD strong sells as well. USD ZAR and CHF JPY, our other 2 strong buys. Now, I've focused a lot on US dollar pairs so far this week. I've already taken a look at USD CAD. Currently listed as a strong buy. It was a strong buy earlier in the week, but based on this new unemployment rate decisions and how strongly the dollar has fallen off, we could potentially see USD CAD start to come back up over the next couple of weeks or next couple of days, but I'm going to stay away from USD CAD at the moment. We took a look at a sell yesterday that was Aussie NZD with that strong sell score of -10, so I want to take a look at a buy again today. Like I mentioned, I've been taking a look at a lot of US dollar pairs, so I think I'm actually going to go with CHF JPY for today. Strong buy, score of +7 should be an interesting one to take a look at. So let's hop right into the CHF JPY breakdown page. Score of +7, that gives us a strong buy bias, like I've mentioned. COT data is a 0 score or a neutral score, and retail sentiment a score of +1. Let's get into those numbers right over here. So the reason we're getting that neutral or that 0 score in the COT data is because currently institutional traders both favored short on the yen as well as the Swiss franc. We can see 68.81% short, 31.19% long here from the institutional traders on the Japanese yen, and 72.13% short, 27.87% long on the Swiss franc. Retail sentiment 90% short, 10% long from retail traders when it comes to CHF JPY. Take a looking at seasonality. We also have a score of a +1 here. And in the month of March, we can see that historically speaking, when we're taking a look at the 10-year average price point, how does this pair trend in the month of March? Well, historically speaking, when taking a look at the last 10 years, it does trend just slightly bullishly in the month of March over the last 10 years. Our trend reading is a score of +2. And we can see that we've continued to make some moves to the upside throughout the past week. Ever since March 2nd, we've kind of just been slowly moving up, and then we had a nice move there, and then same thing, and we're actually up on the day so far, up 0.54% on the day so far, actually. And price forecast predicts that this pair will continue to move forward. Let's finish up with our fundamental analysis. GDP growth, a score of 0 or a neutral score. Inflation, unemployment, and interest rates, on the other hand, all scores of +1. So we can see GDP growth for the yen and the Swiss franc currently 0%. Inflation 4.3% compared to 3.4% for the Swiss franc. Unemployment in Japan 2.4% compared to 2.1% for the Swiss. These are two of our lower unemployment rates. And interest rates in Japan negative 0.1% compared to just 1% on the Swiss franc. So there we go. CHF JPY breakdown, currently listed as a strong buy bias in the Edge Finder. And here we go. One last look at all of our buy and sell biases for the day.
Gold sitting at resistance. Again, I've got to jump over and get ready for the spike. So let me just go ahead and set that up. We are going to go with a 4 window here. We've got 30 seconds, guys. We've got gold on the left. We've got the S&P on the right, the euro on the bottom right, and we're going to put USD JPY on the bottom left here. So we're going to watch this together and see how that goes about, and see if we can get some volatility. Now, again, I have a trade open on USD JPY. We'll see if that turns into anything today. Spike is coming right now. Let's see what we get for jobs numbers, and we'll do some analysis following that. And there we go, a big spike to the downside there. Initially, let's see, that gold price just jumped pretty heavily on the initial release. Let's see. Let us know in the comments, guys, in the chat, if you have the numbers. Please share them with everybody. It is a service, if you will, to help everybody out. Look at that gold flying high here, 1840, and probably the S&P 500 also coming in strong, probably with perhaps worse than expected jobs numbers. Let's see what we've got here. Let's see if anybody, like I said, has it in the audience. Sometimes Forex Factory is a bit delayed. So unemployment 3.6. So more jobs created than expected. However, unemployment numbers actually being higher than expected at 3.6. At least that's what people are saying in the chat. We'll double check once that loads. Again, Forex Factory, a bit of a toss up in terms of how fast it comes out for us there. So, okay, let's see. What's that doing to the euro? The euro is flying high here today, breaking clean through resistance. Wow, much bigger move than I was expecting there for the euro. And pulling back. Wow, look at this. Price coming right up to that 38.2%. Sellers, this is an interesting situation. Again, we have mixed response here overall in terms of the numbers, at least from what people are saying. 311K is the number of jobs created, so hotter than expected, but unemployment rate coming out 3.6. This is interesting to say the least, guys. And I don't know what's going on with Forex Factory. We got to refresh. You know what's happening is probably like 5,000 million Forex traders are doing the exact same thing that I am, waiting for the numbers. So at least from what I can see in the audience, 3.6% in terms of unemployment, and 311K for NFP. I'm sorry, for jobs created. So some volatility there, to say the least, here this morning. Came up to the 61.8% on that euro trade and immediately found some rejection. We'll see if that ends up playing out. Again, if this is able to break today, that's probably just a bearish reading for the dollar. But currently seeming to have a little bit of a response here on the opening move. 5,000 million. Yes, that is a very technical number to give you guys an idea. And there we go, guys. Let's see. We're going to drop down a little bit lower time frame. Here's your 15-minute chart. Initial spike there on euro dollar, and then following that move, that 61.8% just barely missing, and then eventually just coming right back into play here. So craziness there, to say the least. 61.8% rejecting very, very hard that dollar. Let's see what's going on with the DXY here. So shot to the downside. And again, we've got this 4-hour chart marked, as we talked about. Dollar coming into play, 105 getting tagged this morning on the initial release. The S&P 500 rallying, which is of course good for my stock positions. Let's go take a look at SPX 500. So stock market rallying a little bit here. We've also got NAS 100 perhaps seeing a bit of a bounce. Yeah, there's the NAS, and then US 30 I would imagine is following suit. Yep, a slight one, but a jump nonetheless. So yeah, guys, we've been preparing for this event all week. If you're not already inside of our Discord channel, make sure to join that. There is a link being dropped in the chat right now. You guys can join and get access to all sorts of stuff in there. Click this link. It's been dropped in the chat for you. If you click that, you'll be taken to where you can get access to our Discord. If you're not already in there, we give you guys coverage throughout major events like this all throughout the week and month. So if you're not already in there, make sure to join us there.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.